Hey guys, it is Julie here with TipRanks, and today we're taking a look at two trending tech stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're using the TipRanks trending stock page to take a look at a couple companies that have been attracting dozens of Wall Street analysts in just the last few days. And I mean a lot of attention. Both of these stocks have 30 plus analyst ratings. Of course, you can find the trending stock page under the tools menu on tipranks.com. And here we're going to take a look at the best rated stocks in just the last 72 hours. And we'll get our list here down below. So we're going to take a quick look at these two companies and what has them drawing so much analyst attention lately, and of course what those analysts are predicting for the stock's future. Make sure you follow along on the TipRanks website or by downloading the TipRanks mobile app by following the links in the description down below. Let's jump right into our two trending tech stocks. First up, we're taking a look at Zscaler. Their stock trades under the ticker ZS, currently priced at $197 per share. They have seen some great growth year to date, currently up 79%, including growth of 26% in just the last 3 months. Taking a look at this past week, they did have an earnings report, and you can see there was an initial drop off there before gaining momentum here on the 29th. Zscaler is a tech firm in the networking security niche. Their unique selling point is the Zero Trust Exchange, or as the company puts it, the world's largest security cloud. This platform securely connects apps, devices, and users on any network and provides improvements to confidence, online navigation, and business apps necessary for improved productivity. The company boasts that its platform processes more than 300 trillion daily signals to generate a powerful artificial intelligence machine learning effect. As I mentioned at the start, the company did just recently share their latest quarterly report on November 27th, where they did come out with some solid results. For their first quarter, the company reported earnings per share of 67 cents, easily beating analysts' expectations of 49 cents per share. Revenue came in at $496.7 million, which was a 40% year-over-year growth, and they also saw 34% growth in their customers with over $1 million in annual recurring revenue. Following this latest quarterly report, Wall Street analyst ratings are pouring in. We have several 5-star analysts that have reiterated buy ratings, including some increased price targets and lots of opinions coming in. That includes a 5-star analyst from Mizuho. They noted how the company raised their full-year revenue and non-GAAP earnings guidance, and that while some investors were underwhelmed with their billings guidance, Mizuho believes that Zscaler is simply leaving itself room following a new chief revenue officer hire. And we saw a 5-star analyst from BMO raise their price target on the Zscaler stock. They commented that the company's Q1 results were reasonable, though the billings growth upside was perhaps less than investors expected. Longer term, BMO remains positive on their fundamentals, also noting that the company's growing platform and expanding total addressable market can support long-term durable growth. Now, when I said that analyst ratings were pouring in the dozens, I meant it. The Zscaler stock currently has 36 analyst ratings, with over 30 of those coming in just the last few days. And it does come in as a strong buy. With 28 buy ratings and 8 holds, the average price target comes in at $207. From current prices, that would be an upside of 5% given the stock's recent growth. Looking down below here though, we can see this long list of ratings coming in. We do have a few older ones with some downsides that the stock has already surpassed, bringing down that price target. Plenty still in the double-digit upside though. We have a lot around that 11%, some going up as high as 14%, and on the low end, some that are fairly flat and some hold ratings with a slight downside, one downside of 8%. And our second trending tech stock is CrowdStrike. Their stock trades under the ticker CRWD, priced at $233 per share. Now, this is another company that has seen some huge growth the past year. When you look at their 52-week range, they're up from a low of $92 and have seen growth of 86% in the past year, including 41% in these last 3 months. Looking at this past week, it's pretty clear to see here where that earnings report came out, and the stock took a jump up afterwards. CrowdStrike is a leader in the cybersecurity ecosystem, and they are the producer of the high-end Falcon endpoint protection line. CrowdStrike's products have set an industry standard for online network protection and for digital security, and include a range of cloud-based modules for a wide variety of applications. The company makes the products available by subscription through their software-as-a-service model. As you can likely guess from that positive movement on the stock chart, their recent earnings report that just came out on November 28th was pretty positive. They had record profitability and cash flow for the quarter. For their third quarter, CrowdStrike reported earnings per share of 82 cents, beating expectations of 74 cents, and revenue came in at $786 million. This was a 35% increase year over year. Management noted CrowdStrike's record third quarter exceeded expectations, delivering new milestones across the business. Their net new ARR growth accelerated to a record $223 million, and their ending ARR surpassed $3 billion, making CrowdStrike the fastest and only pure-play cybersecurity software vendor in history to achieve this milestone. And of course, this solid earnings report gathered plenty of attention from our Wall Street analysts, one of those being a 5-star analyst from Argus who increased his price target on the stock by $45. He noted that the stock had been hit hard in the 2022 market and tech sector sell-offs, but has made an extraordinary rebound this year. CrowdStrike has a strong opportunity to expand its business to the nearly 50% of companies that have not yet upgraded from traditional antivirus software and to take advantage of the secular growth in the cloud workloads. Also reiterating their price target on the stock was an analyst from Wells Fargo. He said that the company's growth in annual recurring revenue signifies a robust rebound from the previous quarter and is indicative of CrowdStrike's strength in securing both new client acquisitions and expansions with existing ones. He also notes significant deals, including their 8-figure contract replacing Microsoft, underscoring the company's competitive edge. CrowdStrike has an impressive 37 current analyst ratings, coming in as a strong buy with just 2 holds out of all of those. Now, their average price target is not very impressive, but let's take a closer look. That strong buy rating comes with an average price target of $233, which is actually exactly where the stock is currently at. But if we scroll down and take a closer look, we'll see a lot of these ratings in the last couple of days do have positive upsides. Now, we do have a low-end hold with a downside of 12%, but several ratings coming in the double digits. This is our Argus research with an upside of over 14%. And as we scroll down, we'll see a lot still in the positive. As we get to our older ratings, we do have some price targets that have already been surpassed, bringing down our average. So that is a quick look at 2 tech stocks that have been picking up dozens of buy ratings from Wall Street analysts in just the last few days. Let me know your thoughts on these 2 companies. Do you think this growth is sustainable, and is there more growth ahead? I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to. So make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.